Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the Wyckoff accumulation and distribution patterns. You see them here. Here's the accumulation. Here's the distribution pattern. Here's just a quick AI overview. You can pause and read this on your own time. Of course, we'll start out with the distribution, but essentially the concept is it was developed by a gentleman named Richard Wyckoff in the 20th century. It comes up with like a composite man concept. Essentially, you think about the market as one operator, and so kind of like the psychology of the market, the actions, the buying and selling. Imagine it is one buyer that accounts for all the buyers together. And it's just kind of a way to show how the trend is slowly turning around. And let's walk through all the different parts. And there's a way to look at it in a complicated way. There's a way to look at it in a very simple way. A way to look at it in a very simple way is you have an uptrend. It sets a peak, right? It sets a lower low, and then it sets a higher low. And this gives you the up thrust or the false breakout, right? And then it starts to roll over, and it eventually loses the higher low support. Here's the initial higher low lost, and then it loses it again. But in a more detailed way, you have these multiple phases. It's kind of the mark up, the mark down. So you have the accumulation, okay? And then you have something called the preliminary supply. Uptrend starts to slow down. Then you have a buying climax. It sets the peak. It's the high of the move. The automatic reaction, the secondary test. It's trying to test the buying climax. Unable to get all the way up there, it sets a lower high. And then we have the sign of weakness. The sign of weakness, SOW, it's the lower low, right? You have the higher low that fails. So now you have a lower low. You've actually started a downward channel here. What then happens is the price rallies. You break that buying climax, but you have an up thrust. So if you very simply just play an uptrend and wait for the up thrust, you got a pretty good one here. The UT or the up thrust, right? The opposite of a spring, which is a false breakdown. This is a false breakout. So after we have the up thrust, which is up thrust after distribution, you've started to have some distribution. You're in phase B, a little bit of consolidation, tightening range, tries to break out, puts in another lower high. It's called the last point of supply. It's the final attempt for the price to rally, and it starts to roll over, and we see the series of lower highs or a descending supply trend, and then it starts to break down with the SOW or sign of weakness. Here's the additional sign of weakness. Here's another sign of weakness, and essentially it's just loss of support. It's just horizontal classical charting. You're drawing these lines. So just a way, and sometimes people try to fit price action exactly into it. Sometimes it works, sometimes it doesn't, but conceptually it gives you a sense of how the trend rolls over. It advances, has a peak, and then it starts to break higher lows, and then it has an up thrust. You can see it kind of turning around. The opposite, we have the Wyckoff accumulation, and the idea here is that you have ideally a mature downtrend as well. This is not going to work in sideways. I should have said the same for the topping as well. But you have a downtrend, and after the downtrend, what happens? You set essentially a support level, the preliminary support level. Okay, tries to bounce, it gets sent back down. Then you have a climax of selling, the selling climax, right? We have the buying climax. Now you have the selling climax. That's a key low. All right, what happens there? You set another higher automatic rally. It starts to bounce. Short sellers start to exit, and then you have a secondary test. Essentially, it's trying to test support again, but you put in a higher low, almost like this kind of shows you a W or a double bottom with a higher low, except it doesn't break the peak. So you hit that, you have that secondary test, a higher low. It starts to bounce, and it breaks the peak here of the automatic reaction. So that's a first sense here. You get your first lower high break. Comes back down, and you get these secondary tests. You're testing this demand zone. You're testing where bulls rejected lower prices, and then you see the spring. So the spring here, this is phase B with a secondary test. Phase C, the spring is very important. It's a false breakdown, and it's a false breakdown of the major low. See these lows here, secondary test. See this really well-defined support level? It's broken and quickly recaptured. So you can just watch this thing and wait for the spring. And that's the easiest way to play it. Same with the up thrust. But you get the spring, you start to mark up from this point. You get the sign of strength. Where you start to get this, the first sign of strength, where you get these peaks, doesn't mark it here, but this is your first sign of strength, breaking above the automatic reaction level. And then you get this rising demand trend, and then another sign of strength. You can look at this whole thing as a rounding bottom as well. This is a rounding bottom, breaking its peak. This is even a double bottom, an Eve and then an Adam double bottom, breaking its peaks. You can call it, it's like, what do you call it? But this, you want to be too careful trying to fit price action exactly to this. More so think of it as a concept to understand how the trend is turning around. In this case, a downtrend going red light, orange light, green. It's a perfect example of that. So this is the Wyckoff accumulation. This is the Wyckoff distribution. And this is both for the Trading Encyclopedia Daily Education series on my YouTube at Ched's Trading. Find me on Twitter at Big Cheds and on Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Cheds out.